All right, YouTube, what's up? Crypto Jack coming at you. We're going to talk about descending triangles on Bitcoin. Okay. This is a particular pattern. It's very ominous. We've seen it before in Bitcoin's history. We'll go over this, but it is not something that we want to see creep up again. These are not the kind of things we want to see. We want them to go away, or we want to see them become invalidated. So while this is a discussion about a bearish setup, the purpose of this is not to go enter some kind of sweaty shorts. Rather, it is so that we can kind of understand, okay, at what point is this particular setup invalidated? Even if you're a bull only trader, identifying bearish setups will help you get into position for a bullish breakout, or at least identify when the bullish breakout occurs reasonably. So let's switch over. Let's take a look at it. Okay, descending triangle. So this is a very easy setup to identify. You have a series of lower highs. You have a series of equal lows. You have multiple tests over a significant amount of time. You can see this pattern arguably kicked off if you start there early June, or if you want to start with the lower touch, it's mid-June. So June all the way into late September. That's plenty of time for a medium time frame consolidation pattern. We're using daily candles. This is one of my favorite ways to look for patterns, is using daily candles. And I have it on linear. I have log turned off for a reason. We'll get into that in a minute. So this is on linear. Usually, if you come to my live streams over at twitch.tv/cryptojack, I generally will do some technical analysis with log on. Anytime I have to measure the expected pattern moves, so there's something called a measured move, or maybe like a fib extension. In either case, a lot of times I will use linear to get a accurate assessment on what the measured move might be. So we're going to do that right here. We'll get into a couple other things here in a minute. Now, this pattern is scary for a reason. Let's kind of go back in time and let's look. I'm going to turn log on for a moment. I'm going to turn log on for a moment just so we can see it quickly, because I have to go back through time and I don't want to have to zoom in a whole bunch of times. But we can see the last time we saw a descending triangle over a year's period. So we're only talking about a few months today, but it has happened where it took place over roughly a year. And this was back in 2018 with the floor of 6K, where ultimately it broke down, and the breakdown was very sudden and very violent. Okay. And it dropped all the way down to 3K. In hindsight, this was the bear market bottom. Doesn't feel like it in the moment. It never does. And when all you see on the chart is something like this and it just goes down, it feels like it's going to just continue doing that forever. But as we know, with a little bit of crystal ball action, we understand that this ended up, get out of here. We understand that this ended up being the bear market low. So back to the topic at hand. Let's go ahead and pull over these two items, which I had prepared, because look at me, I'm a pro video maker and pro streamer all in one. And we have a example of what this looks like, right? You can see how this is very clear. You have a descending, the trend is down, right? It's descending. And then you have a period of consolidation. Consolidation is identified by a series of lows and highs. And we see that the expectation then, the high percentage play would be to see something like this. Now, we're going to get into the 1618 target and the measured move and all that stuff in a minute. But one of the first things I want to go over is, a lot of people will see this and be like, oh, well, Jack, just enter a short then. It's easy. If you see something like this, just enter a short. Blah, 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 blah. But it's not that easy, okay? Because these markets, you can see how the markets had about 5 days to break down and it hadn't done it. So wouldn't it be something if you entered your short right here because you were just so convinced you're at 18,800, 18,500, and you just know we're about to just giga nuke to the downside, when instead the market comes up, gives you a little fake breakout, consolidates, and then drops down, right? So you're long since your stops have been hit. You've been liquidated, whatever the horrific scenario is. But stuff like this happens all the time. Okay. So I do not like trading these until there's a breakout of sorts. So a great example would be when there's a breakdown with some consolidation, perhaps a breakdown with a retest, and enter some. If you were going to short, I don't recommend it, but if you were looking for that opportune time, I would do it, with something like that upon the retest of support turning into resistance, which oftentimes you'll see markets do before it goes down for the actual move. Now, let's get into these numbers I have right here. So the 1618 extension, it comes out to be about 13K. All right. So let's just measure that out. If you measure, so I do the 1618 on log typically, okay, but I'll show you both. All right, so if we look at the 1618 extension, which is a fib retracement tool, if we use the fib retracement tool and turn on the 1618 extension, which is one of my favorite things to do, then you can look at one of the identified levels for where a move might take us. I back tested this many times. This works very well. So I love using this as a sort of like, okay, we need to watch this level in particular. Oftentimes this will correlate with other things. So for now, let's just leave it at the 1618 log. All right, number 2, if we put it back on linear, you'll see that this is almost right at 10K. I think it was 9.3. So let's call it 9.5 just for like kind of a nice even number. And lastly, the measured move. Now, if you look up in the textbooks, if you look online on informational sites, a lot of them will discuss how to identify a measured move. But you notice I didn't start by that because I don't want you to be too bearish or looking too low that you miss some of the other opportunities that come up. So here's a great, for instance, the measured move. Let's discuss first what the measured move is. So if we go from the very first touch to the highs to the lows, and then you measure that down, you extend that downward, which is the proper way to do this, then what you get is a measured move all the way down. This one shows 4,400. Let's just call it 5K because there's a, let's say the actual breakdown's a little higher, so it drags it up a few $100, whatever. 5K is a nice round number. We're gonna use 5K. So the measured move here is 5K. But what if, while waiting for something like that, price comes all the way down to say 11, 10, 9, and all of a sudden you see this trade range being built with, some Wyckovian characteristics. If you look at it closely, you say, oh, look, there was actually like it ran the lows, there's equal highs, suddenly it's breaking up, it's consolidating, it's sending it. Maybe this little moment in time takes place over 6 months. That's the kind of thing where if you were just sitting there waiting only for 5K, you would have missed all this opportunity. You were like, no, I'm not touching 10K Bitcoin because I need my 5K because that's the measured move. But you got to keep your eyes awake and look for these opportunities. The same thing is true with this broader pattern. If, for example, we get a fake to the downside, we come up and we start consolidating upwards, we need to not miss the forest for the trees. Okay, so here's a great example. This is something that I'm keeping my eye on as well. Let's say, for example, that this actually turns out to be a sort of trade range. What does this look like? Boy, that looks an awful lot like Wyckoff stuff, right? That I cover just about every stream. I'd love to see something like that. You show me something like that, I'm all in. That's what I want to see. That's a very bullish outcome for a very, very bearish setup. But it's all about this break to the upside. So we need to not be so hell-bent on getting our 5K Bitcoin or whatever that we miss these other opportunities that absolutely could come. By the same token, we cannot be blinded by potential bullish outcomes, such as this, this turning into some sort of Wyckoff range, that we miss the very obvious patterns that are laid before us, such as this descending triangle. So if we are thinking about all these opportunities, we've analyzed the bull, we've analyzed the bear, we kind of put it all together. Here's where we are. This is how the roadmap looks. We are in a downtrend. Check. We are in a macro global bear market. Check. There is no sign that this is reversing anytime soon because the things that have caused the bear market have not been undone. There's no really counter to those things. So that's a big point. 3, so interest rates being a great example. There's no relief that in that side. There's no quantitative easing. There's no helicopter money floating out. Number 4, we are not at the next halving. Historically speaking, the crypto markets don't go into an actual uptrend, a really nice bullish uptrend, until right around the halving, maybe 3 months before, 6 months before. There's a lot of volatility and chop and that kind of thing. But historically speaking, the actual bull run, so not consolidation in a bear market, but actual sustained trending bull run to the upside won't happen, doesn't happen until the next halving. The next halving's not scheduled, not estimated until 2024. So you got some time. So just, pump the brakes a little bit and understand that everything is pointing down until proven otherwise. However, that being said, I want the charts to tell me when to buy, when to go long, when the bear market is potentially behind us. Like we talked about, something like this would absolutely, set that scenario up, but we're not there yet. So we're going to understand the reality, which is this is very bearish. This is a bearish pattern. It is likely leading to bearish things. However, that being said, as good traders, we have our decision tree of like, what if, and the other side to this is we need to not be caught in any kind of short or miss some big opportunities if all of a sudden we see a trend to the upside, which could lead to a really nice entry long term. I guess another thing I want to add before we conclude this video, everything during bear markets, you need to be like any kind of trade needs to be with the long term in mind. I'm a big fan of that. A lack of liquidity is a hallmark of bear markets. So what does that mean? Well, that means some news event comes out, we drop 9%. And then overnight, we go back up 10%. There's all this chop. It's very, very hard to make profitable, sustained, sequential trades if you're just trying to trade the chop. Somebody said this is 1% season, and I love that. So if you're trying to make 1% on a move, by all means, go for it. It's a great way to think of things. But if you're looking to make that 10, 15% move, 20% move, like maybe it was pretty easy in a bull market, wait for a bullish setup, trade the breakout, ride it up to some level and take profit. You're not going to get that in this environment. Oftentimes it ain't going to be that easy. I promise you. So everything you do needs to be with the long term in mind, building your plan, sticking to your plan. Okay. This is very, very important because if you can be shaken out of a 19K, let's say Bitcoin's at 19,000 today. If you're shaken out of your long term entries at this price because it falls to say 15,000 or 12,000, but then 2 years from now, we're at 100,000, for example, you're going to feel kind of silly. You're going to be like, oh man, why did I sell? And this is not a knock up on you or me trying to act like I know it all. It's because I've been that guy. I was that guy, three halvings ago or 2 halvings ago. And then, this happens time and time again to where you're like, oh, I see this. I'm just being silly about it. I'm not thinking long enough. I don't have the long term in mind. So at the end of the day, I just want you guys to not be shaken out of what in the future will be very, very good entries. Remember, Bitcoin was at 70,000, and then here we are at 19,000. So yes, could it fall another 50% or more? Absolutely it could. Should you put money you can't afford to lose into this market? No, you should not. You should not be playing any games with stuff like that. Stop buying NFTs. Don't do any of that kind of stuff. Get it out of crypto. Protect your cash right now because, as I said at the start of all this, every trend is pointing down until proven otherwise, and we're waiting for that. We're poised for that proven otherwise part. We're just not there yet. So again, I encourage you to come up with your own plan, keep the macro environment in mind, stick to your plan, and catch a live stream every now and then. I know I will typically have 2 live streams a week, hopefully more. I've had some personal things that have caused me not to do that as much recently. I hope that in the future, I'm able to get back to my schedule, maybe even do a little bit more. Time will tell. So until then, guys, thank you for tuning in. Thank you for watching the video. I love you all. I wish you the best. Hopefully I see you at the Litecoin conference here coming up in less than a month. And I think that's it. All right, Jack's out. Take care. I'm not trying to be perma bull jack, perma bear jack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. I'm not your bear guy telling you to sell.